Let's move on and talk about ITC. A lot of FMCG numbers yesterday came out. So yes, I'm going to be taking a bit more time to talk about them because ITC reported its numbers. Not much of an excitement, right? In line with what ET now was also expecting. And yes, that's the word even coming in from brokerages this morning. Overall cigarette volume growth around, one could say, is at around 2 to 3% that we are watching out for. One positive surprise that came in on the agri business, which was under pressure. Cigarette volumes 2 to 3%, revenues in line, margins and profits a slight bit of a miss that we're seeing. So that is the key highlight for ITC. Obviously, paperboard business that continues to be under pressure because of impacted by the international markets, China supplies. That's something that is impacting ITC. Now, brokerages, JP Morgan continues to maintain its overweight rating, given a target price of 535 rupees per share. They said its steady cigarette performance came in, revenue growth was steady. Our raw material inflation, that's something that dragged the margins for cigarette. But yes, that's what one was expecting in the terms of the expectation there as well. So mixed trends for other FMCG business, non-FMCG business like hotels, that did fine. Paperboard continued to be muted, so they maintained their overweight rating. Jeffries maintaining their rating as well. 585 is the target price, and they said stable taxation is something that's providing the visibility in terms of the momentum for the next few quarters. But other segments that reported a disappointing revenue as well as margins, tough macro environment, that is something that they're watching out for. So keep an eye out on ITC today. Could see a bit of a muted show coming in, and in the last, post that rally after we saw the budget as well, because there was no increase in terms of taxes. So yes, keeping an eye out on ITC on where it is headed. Let's move on now.